back to Ledger Pulse. Before we begin, this video is for informational and educational purposes only and is not financial advice. As always, do your own research before making any financial decisions. Welcome back, everybody. Today's update brings us together for four major developments that, when viewed together, start to form a clear direction across markets. We're going to be looking at Bitcoin outperforming gold and the S&P 500 during geopolitical tension, a massive capital raise led by Saylor, a major statement from Larry Fink on tokenization, and Ripple expanding into Australia. Individually, each of these matter, but together they point towards something bigger. Let's break it down. So Bitcoin outperforming during conflict. We'll start with market performance. During the recent Iran-related geopolitical tensions, Bitcoin has outperformed both gold and the S&P 500. That's very significant. Historically, gold has been the go-to safe haven. The S&P 500 reflects broader equity performance, and Bitcoin has often been viewed as a more speculative asset. But in this case, Bitcoin held stronger relative positioning. That raises an important question. Is Bitcoin beginning to behave differently during periods of uncertainty? Because if capital is choosing Bitcoin over traditional safe havens, even temporarily, that's a shift worth paying attention to. When an asset outperforms during stress conditions, it tends to change perception. Markets start to reassess risk profiles, utility, and long-term positioning. Bitcoin outperforming both gold and equities suggests that it's not just being traded, it's being positioned. And positioning is what drives longer-term trends. Even if this doesn't immediately redefine Bitcoin's role, it adds to a growing list of moments where it holds strength under pressure, attracts capital during uncertainty, and gets compared directly to traditional assets. Now let's move to one of the most talked about developments. Saylor is reportedly raising $42 billion to acquire more Bitcoin. That number stands out, not just because of the size, but because of what it represents. Conviction at scale. This isn't a short-term trade. This is a long-term accumulation strategy, and it reinforces a broader trend. Large entities continuing to treat Bitcoin as a strategic asset. When capital of that size enters the conversation, it does two things. It adds demand, and it influences perception. Because markets don't just react to pride, they react to who is buying and how much. Moves like this tend to have ripple effects across the market. They signal confidence in long-term direction, willingness to allocate at scale, and a shift from speculation to strategic positioning. It also creates a feedback loop. Large purchases attract attention. Attention attracts additional capital. And that reinforces momentum over time. Again, not immediate, but directional. Now shifting to the institutional side, in his 2026 annual chairman letter, Larry Fink, CEO of BlackRock, compared tokenization to the early internet. This is a very strong statement because the internet wasn't just an innovation. It was a foundational shift in how systems operate. By making that comparison, the implication is that tokenization could reshape financial infrastructure in a similar way. This isn't coming from a niche voice. It's coming from one of the largest asset managers in the world. So when that perspective enters the conversation, it adds weight to the broader narrative around digital assets, blockchain infrastructure, and long-term transformation. Tokenization isn't just about crypto assets. It's about representing real-world assets on-chain, increasing efficiency in settlement, and reducing friction in financial systems. If that vision develops over time, it changes how assets are issued, traded, and transferred. So the comparison to the internet isn't about hype, it's about infrastructure evolution. And finally, let's take a look at Ripple. Ripple is reportedly planning to secure an Australian financial services license as part of its expansion into the region. This would allow them to expand payment offerings, strengthen presence in the APAC region, and operate within a regulated framework. This is very important for them because it reflects a broader trend, expansion through compliance. Instead of avoiding regulation, companies are working within it, building around it, and scaling globally through it. So putting everything together, when you take a step back and look at everything, Bitcoin outperforming during geopolitical tension, large-scale capital is being allocated, institutional leaders are framing blockchain as foundational, and companies are expanding globally through regulation. These are not isolated signals. They point toward a market that is maturing, attracting capital, and evolving structurally. So what stands out right now isn't just momentum, it's alignment. Across performance, capital, and infrastructure, the direction is becoming clearer over time. That does it for this video, guys. If you found this helpful, subscribe for daily updates. Thank you for watching, and I'll see you on the next one. Thank you.